And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Wednesday, January the 12th. I'm John Hoagland. Thanks for trusting me with your time. If you're already in the markets, hopefully you've got things going your way. A little bit of economic information this morning. CPI numbers came out year over year as expected, 7%. Core month over month, most of those were about 0.1% higher than expected. Not upsetting the markets at all yet so far. We're seeing some upside momentum here in the equities. We even have a little bit of hope for the euro this morning. Euro is looking a little bit like there may be a market state change on the way for the euro as we were looking at the CPI numbers just a little bit ago, just a beginning of inflation-related releases this week. We're looking at PPI tomorrow and retail sales on Friday. U.S. stocks were steady higher before the numbers came out, looking like they are pleased with the numbers here so far. We've got a late spike in the S&Ps. I'm calling it a late spike in the S&Ps. So we are looking like we're going to be opening above that, showing signs of acceptance at higher pricing. We will be keeping an eye on that, of course. Unfortunately, hospital admissions due to COVID hit a record high yesterday. With that, of course, brings a new 3-month high in mortality rate with the COVID. That's not good news. Crude prices remain firm. Crude trading at weekly kickoff high right now, $82 a barrel. The EPI is expecting a 1.9 million barrel draw. The API yesterday showed a 1 million barrel draw in crude inventories, but there was a $10 million build on gasoline. I'm going to be trying to keep an eye on that gasoline number today at 9:30 if I'm going to be trading crude oil. That may be somewhat impactful for us, but as always, we're going to look at these charts. We're going to seek context. We are going to look for areas where we can manage our risk well. And of course, we're going to try and stay patient. Always, patience pays. We all know that. The personal note, Lacey and I survived her first outing this morning. We didn't see any coyotes, so we didn't have to kill any coyotes. And I want to thank all of you that reached out with some suggestions on how to handle this in the future. If we ever run into another coyote, it's a pretty scary thing. And your dog's out there and there's a coyote on the other side of the fence. No problem today, though. I feel a lot more together. I was a little shook up yesterday, if you didn't notice. But make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always appreciated and encouraged. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. I'm going to put the link in for Top Step Trading Foundation. Today we're going to be going over the Top Step TS Trader platform. Open up a new one and set it up. Probably a little bit about how I would set it up. We're going to talk about the charts, changing the charts, time frames, TPO charts, how to set up the TPO charts. We're going to look at the dome. We're going to place orders. We're going to mess this platform up, and I think that's what I suggest doing. Anytime you trade with a new platform, you've got to get some time on a simulator, get it all messed up, get it all straightened out, and by the time you're done doing that, you'll have a pretty good idea of how to run the platform. Also, that today, right after Top Step Trading Foundation, we do have group coaching. It may be a little bit late. maybe a little bit late because it comes right after foundation. So if I'm a little bit late getting there, if you're not in foundation, be patient. I'll be there as soon as we finish foundation, maybe around 1:15. Hopefully not too far after that. And always looking forward to spending time talking about trading with traders. Always a fun thing for me to do. VIX down a little bit again this morning, 1813. Dollar index down slightly, 95.57. And the yield on the 10-year, even a little bit lower. You spiked up a little bit after the CPI numbers, but I think we're pretty close to 1.73 or 1.74% this morning. So continuing to come off a little bit as we prepare for the trading day. Going to say good morning to everybody. Sean from Bangkok. First in the room, Sean, you win the prize this morning. Chris, good morning. Nice CPI. Brian, Jim, Charles, Tone, Jeff, Frederico, Ricardo, Janus, Drew, good morning. Nico, George, good morning. Mirik, Devante, Vince, Zerain, Devante, good morning to you. Money day. Yeah, let's make some money today. Always our goal here. Main goal, follow your process. Follow your process, the money will come. Joshua, good morning. Good morning, Sarah Hall. Ali Al-Haji, good morning. Christo, Manuel, Amanu, good morning. Year-to-date max trade in this 15. Oh, good. It sounds like that's a good thing there, Amanu. Terry King, good morning. Jerry is awake. I hope I am too. Alfred, good morning. Big main point, big ideas. Good morning to you. Jeff Martin. Yeah, I'm glad we're both okay. Yeah. It's a scary thing, man. We love our little doggy. Well, big little doggy. She's about 80 pounds. My son seems to think that she might be able to beat up a coyote, but coyotes fight to eat. At least he doesn't fight to eat. Deer like to stand on the other side of the fence and taunt our dogs. They're always doing that. I don't see a lot of deer out here, but when I do, it's certainly something that piques Lacey's curiosity. Equanimous Trading, good morning. Where can we get the current weekly kickoff? Well, we talk about them here when they're in play. Equanimous, we do send an email out every Sunday that's called the weekly kickoff email. If you're not getting it, if you have opted out of our emails, contact support on how to get back into those emails. If you have not opted out, I would suggest checking your spam folder for that email. It says weekly kickoff, comes with my email on it. And then if you ever have any questions during the forecast, just go ahead and ask. Of course, Nicholas, Dr. VJ, good morning. Ryan, Stephen Wagon, Jacori, Stephen C, good morning. And Rob T, good morning, everybody. All right. Any other announcements, thoughts, ideas? It's Wednesday, hump day. What day is it? Coyotes came out of my area with all this new housing development. Now we have to watch for them when I walk. Yeah, they are bold. It's kind of funny when I finally got Lacey in the house and got calmed down. I looked back in the backyard, and that coyote was sitting maybe 15 feet outside the fence, just looking and seeing if anything was going to happen. Cougars out there. Oh, my goodness. Good morning, Rick. Good to see you. In case you missed it yesterday, we had an encounter with a coyote with Lacey yesterday. Everything's okay. Just got to be a little bit more cautious, it seems. All right. So let's jump into the charts here. As always, going to look for context. And starting with the S&Ps this morning, let's take a look. All right, so as always, starting with the daily, on Sunday nights, when I'm preparing for the week, I start with the monthly, then I go to the weekly, Then I go to the daily. If we were going to do that here, I don't know if we'd ever get out of here. So we start with the daily. We've got the market. We're well aware of the context of the market. We're continuing to push higher. We've had some pretty deep pullbacks here. The pullback on Monday below weekly kickoff low, swiftly rejected, put in a late spike at the end of the day. Looking at what we did yesterday, we tested down to weekly kickoff low. Pretty good shot there, if I say so myself. We lost 20,000 in open interest yesterday. Volume was lower. That doesn't surprise me on an up day. We didn't bring in new buyers yesterday. We basically covered shorts yesterday. And then we, of course, created a short position for our short time frame traders, which created our push to the upside late in the day, which I'm calling a late spike. We're going to be opening above that late spike anyway, and when we do open above that late spike, it's indicative, if you can say that, it's indicative of the acceptance of higher price. Now we had a news come out. Excuse me, I do have a little bit of a cold. We had the news come out, and we are seeing that the markets are accepting of that news. Whatever that CPI news was did not frighten markets. We see the market continuing. So the market remained out of balance up to the highs yesterday. We've got today, we've got tomorrow, and we've got Friday with some data-rich information coming out. Let's take a look at the 30-minute chart and see if there's any opportunities we can find here. Hey, Nemo, good morning. Thank you again for the email and the ideas on handling these coyotes. So here's the late spike we had yesterday. We opened in the late spike. We did not necessarily, when we do have a late spike, we don't absolutely 100% have to go any direction. Of course, we don't have to, of course, go directly higher. The market pulled back to weekly kickoff low, the value high from that day. The base of the late spike we would call probably up here at 46.46, but where the late spike begins, that bar, the low of that bar is 46.30 approximately, where weekly kickoff low is 46.28. Target rich environment, ladies and gentlemen. If we were not going to hold weekly kickoff low and reaccept inside value from Monday, that would have, of course, created a different outcome, but it does offer the opportunity to recognize, hey, we're not accepting higher prices. We're accepting value from Monday. Maybe we'll have an opportunity to look for an opportunity for long at lower levels, or a shorting opportunity getting there. All right, so enough about yesterday. We put in that low early in the session, and we basically one-timed all the way to the end of the session. Long liquidation, short covering. We lost 20,000 in open interest. So we've yet to start to build new business, move to the upside in this area. We may expect that today. We're going to open with a gap. We didn't really have any overnight inventory until after the numbers came out, accumulating a little bit of short time frame longs here. We open with a gap. We can't close the gap. The rule is we go in the direction of the gap. We look for longs. So we've got some pretty good context here. We got a late spike yesterday. I'm calling this a late spike yesterday because the market was continuing to push higher and did not have the opportunity to accept those higher prices in the regular trading hour session. We can see once the market closed, it just kind of hung along settlement. Now we've got a new opportunity in regular trading hours to see if we bring in some longer, stronger, bigger traders. They may have been the ones that covered shorts because we tested down to weekly kickoff low. We tested down to it and through it on Monday, but we rejected it and we left a late spike. This is buyers. So again, we're going to open with that late spike. If we can't close the gap, I'm going to be looking for opportunities to buy any weaknesses and see how this market continues to hold. We've got our weekly kickoff high in the S&P is 47.98. Seems like a long ways away. We'll see. We've got the crude oil opening up right now. We got the first minute here. We're going to take a look here at the daily. Boy, we saw some pretty decent open interest increase come in on this move to the upside. We're still seeming like we're building volume. We added 37,000 in open interest. That's estimated, but that's a pretty good idea that we were bringing in new buyers. $82 weekly kickoff high. What a great place to open. Take a look at the 30. We've got just about to finish that 1 minute. Opening with a gap. Okay. No real spike here. Overnight longs opening with a gap. Looking like we may have left the opening range at the high of the session. Let's give it a look. So yeah, right now, after a minute and a half, we've left the opening range at the high of the session. We've got $82, which is an important inflection level. If we can't get down below and accept down below $82, I would look for this opening range not to hold for very long. Again, if we start to accept below $82, we may scare some of our somewhat long overnight inventory into giving us the opportunity to look for a long in a better trading level. Again, we've opened with a gap. We've got an important inflection level between price right now and that gap. Here we go. Let's see if we can. Okay, we back into the opening range. Haven't taken out the high of it just yet. But it seems as though the market is in a very short time frame rejecting price below weekly kickoff low. This is going to be an interesting trading day for us today in crude oil. Well, they're always interesting and challenging trading days. It just gives us some good reference. You know, this weekly kickoff level is a level that I believe longer time frame traders will need to or want to adjust inventory. It seems as though they did so on the way up here. Are they going to continue? Would make sense to me. Let's take a look at the Nasdaq. So obviously the market's S&Ps, Nasdaq, not scared by the CPI numbers. I guess that's a good thing. Nasdaq here, we lost 3,300 in open interest yesterday. Short covering makes sense. We in a range bound market, we looked lower, rejected. We just decided, all right, well, we're not going to go lower. Let's look for longs or cover some of those shorts. So it looks like a little bit of short covering yesterday. We did not have a late spike in the Nasdaq necessarily on Monday. Yesterday, not sure. We're going to take a look. I guess we did have a late spike on Monday. It was the weekly kickoff low. Open interest loss, short covering, new business to continue. We are going to need new business to bring this market back into the center of this range, back to weekly kickoff high. And again, new business to continue the market moving to the upside. I believe there is a lot of cash out there on the side, and I believe all of this is certainly possible. What you don't expect to happen usually does. No late spike activity yesterday. We just need time to accept here. Let's take a look at the 30-minute chart. Here's our late spike on Monday. I was wrong about that. The market opened, traded to weekly kickoff low, very similar to the S&Ps, but it stopped rallying here about 10, 11 o'clock and really just spent some time in acceptance of higher pricing here. Now we've got the market a little bit long. We're holding some overnight longs, but we are going to be opening with a gap. Again, my apologies again. Yes, that is a naked point of control right around 16,150. The black and purple lines, the black lines are weekly kickoff levels. These are levels that I believe longer time frame traders are probably going to enter the marketplace. The purple or pink lines are previous week's high or low. So this pink line right here is last week's low. Weekly kickoff low is the line just below that, and weekly kickoff low in the Nasdaq is 15,492. So, Mark, as a first-time viewer, very glad that you're here. The weekly kickoff levels are levels that we put out on Sunday night. I put them out in 5 markets: the E-mini S&P, the Nasdaq, crude oil, gold, and the euro. We have a couple of extra ones here on the market forecast in the 10-year and natural gas. But the weekly kickoff levels are levels that I calculate usually on Friday evening, because the weekly kickoff email comes out on Sunday afternoons. But these are levels that I calculate using technical analysis, market profile information, some math, and some tea leaves. But quite often they do offer some decent opportunity, and I love them because they're mine. I trade them, and if they don't work, I don't risk a lot. I don't have to risk a lot. These are levels that I think are important enough for longer time frame traders to make their decisions in and around. PD, no, I had COVID once a year ago. I thought I had it over Christmas, but I tested negative, and this just seems like a little bit of a cold to me. I don't know what it is, but I'm feeling all right. I'm just a little bit tired and nasal, and a little bit of a cough, but we're in good shape. So, Mark, again, welcome. Glad you're here. Just really here to help try and put some context and offer some opportunities. I don't say buy here or sell there. I don't think it's my job to do that. I think it's my job to, help people learn something that they may not know. I don't want to be handing out fish. I'd rather show you where there may be some fish and have you learn to catch them yourself. If you can do that, you can do this for a long time. If I quit doing this and you're waiting for my recommendations for trades, where are you going to be? All right, so back to the Nasdaq. Enough of me yammering. You're welcome, Mark. Equanimous. It depends on the volatility. It depends on the situation. In the S&Ps, I'm okay risking 5 points. If I don't have to, I won't. Stops are typically chosen from market-based information, not necessarily I only want to lose this much on this trade. So it really depends on the how good the trade location is with regard to the level that I'm trading at. Maybe I got the open interest incorrect here, Drew. I'm sorry if I did. Find that interesting. Both of those numbers are very much larger than normal. Yeah. You bet, Equanimous. All right, let's take a look at gold now. I have some high hopes for gold. At least I did here on the open, because we've got a test here of weekly kickoff high. Inflation chatter. We see the market kind of, let me go to the daily. We see the market kind of up, nearing the highs of the kind of rangy area that we've had. Now we've had some deeper moves lower, deeper moves higher. Overall, weekly kickoff high and low usurp pretty much the last 2 to 3 weeks of trade, and we're approaching that level. Weekly kickoff high is 1824 even. A level of importance that I look for opportunities to trade in or near. Now, the market opened this morning, didn't leave the opening range, neither the high nor the low. I wasn't going to be trading it anyway because of the CPI number. We got a nice addition of open interest here, 23,000 additional open interest. That's a pretty big number for gold, as Drew was talking about the big number in Nasdaq. This is a pretty big number in gold. Let me just check on something here. Yeah, we added 14,000 the day before. We added 23,000. There's money coming in, and the money's coming into the long side. So if we end up too long, we could see a push back. But if we continue to see new business coming in buying this, we could see a breakout above weekly kickoff high again. With that weekly kickoff high, 1824. Are we going to exhaust the sellers there, or are we going to exhaust the new longs if we do get too long? It's really the question. But weekly kickoff is that important level where we will look for those changes to occur. Now, occasionally a weekly kickoff level will become magnetic. Sometimes the market gets there and nobody can make a decision. So once in a while that'll happen, and we got to be careful because we tend to look at those levels as long above and short below. If we do that, we can get chopped up. So, look for opportunities the first time, maybe the second time we approach these important levels. If it becomes magnetic, we're going to leave it alone. 30-minute. All right. So we have finally filled this gap yesterday. The market opened. We were too long. We had some overnight inventory offer us cheaper opportunity. We closed the gap. The gap became supportive. We ran this market higher all day long. It did open. Just going to make this big so everybody can see it. There was no balance here yesterday during the major part of the session. So we closed up near the highs and didn't really have a lot of time to accept those highs. So this I'm treating a little bit like a late spike. Okay, we don't have a gap. We've closed any gaps that we had. We tested to weekly kickoff high. We tested to that naked point of control up at 1825. We found some sellers up there. But if we continue to see buying coming in on decent volume and an increasing open interest on the market moving higher, what does that tell us? That gives us the information that we're in a healthy auction as volume increases, open interest increases, as price continues to move higher. It's a market that's more likely to continue in that direction. Now, we're at risk of beginning a market state that we could depend on that, but so far we're still range bound. So as long as we're range bound, we're fading extremes. We get a breakout to the upside, we go with the breakout. Let's take a look at the euro. Finally, a little bit of life here. Here's the daily. Lacey down. Somebody's walking a dog. I know, it's a friend. I know, but we can't go right now. I'm busy. I got to take care of this. All right. Volume's been maintaining very nicely, but that just seems to make sense. The market's been in this range for seemingly 10 years. Open interest, we had a nice increase yesterday, moving price towards the extreme of the area of balance. We've got a kind of a two-step resistance area here. We've got last week's high, which really kind of caps off most of the activity, range-bound activity. We're above that. We're testing weekly kickoff high, which gives us yet another opportunity. Last week's high, short time for resistance, not anymore. A weekly kickoff high is our new level that we're going to be focusing on, and we are right there as we speak. So take a look at the 30-minute chart. I'm kind of excited about the euro because it's been so long since we've seen any decent market state changes. The number comes out. We didn't have any overnight inventory. This is buyers coming in. Are they short time frame or are they longer time frame? We can't see that right now. Let's take a look here and see if we can see any divergence. So I would say we do not have a divergence. We have delta congruent with direction. Might be indicative of shorter time frame traders. As long as we hold below that weekly kickoff level, I can take trades against it and be able to limit my risk. That's my whole shtick. I'm limiting risk. We looked above it, we've resisted. We get another chance at it. We may get a chance to bring market back into range value and an opportunity for a short. We start to show some momentum, some volume up above. That's when the market state break comes into play. Right now, doesn't look like we're seeing anything too great as far as momentum to the upside. Doesn't mean it's not going to happen. And 10-year. So I think we talked yesterday about starting to look for opportunities to buy weakness in the 10-year instead of looking for opportunities to sell strength. It turned out to be the correct thing to be thinking. We've got some new longs as we added 38,000 in open interest on the preliminary open interest. So we saw, instead of short covering, we saw buyers coming into this market, and we see those buyers continuing to try and push price higher. Volume was slightly higher yesterday. I'm pleased with that, with the increase in open interest off weekly kickoff low. I'm also pleased with that. Take a look at the 30-minute chart. So here's late spike. Opening above the late spike. We're seeing acceptance of higher price. Now we're seeing a potential resistance area with this naked point of control and the weekly kickoff high. If we do not accept above that, this could be a nice spot because, again, it limits risk. I don't have to risk a lot to see if this level is going to hold. Excuse me. Again, my apologies. Take a look now at the nat gas, and we will be down to business. Oh, shit. No, this is the nat gas. This is the 30 for the nat gas. All right, let's take a look. Here's the 10-year. No late spike, although the market was out of balance to the upside pretty much the entire session. We did open with a gap. We closed the gap, found support there, and we've been kind of looking at potentially coming up and closing this gap up above. I don't know what the heck I was looking at there. It was the nat gas, not the 10-year. Now let's look at the nat gas. Where is the... Here's the 30 daily. Here we go. So we had weekly kickoff high here at $4.07. We looked at it. We opened above it this week. We closed above it on Monday. We're finding that the market is continuing to try now and push to the upside. We added 6,100 in open interest on another rejection below weekly kickoff high and a move to the next and a close near the high. The market this morning already testing our kind of next level of potential weekly kickoff level here. I have that written down, $4.50. We're testing it right now. These markets are kind of giving us opportunities as we speak here. So now let's go to the Nat Gas 30. Late spike, opening above the late spike, up against a resistance area. I love these situations. I love when the market offers us these opportunities because, we're very, very close to this point of inflection. If we take it and it gets much through it, of course we're going to need to recognize that the trade's probably not going to work. But at this level, it is so cheap. How can we not do it? If this level holds, then we're going to have potentially a nice move back to the downside. We've got Europe, the London market, London session really was the one that brought this market up here. It makes me a little nervous for shorts if something's going on with nat gas in Europe, but it doesn't change the fact that the technical level of the weekly kickoff, next level of weekly kickoff high, I should say, could offer us this opportunity. All right, I think we're pretty good shape. We got about 8 minutes before the open. Okay, well, I think we're going to call this a forecast. Busy day. We got Top Step Trading Foundation. We've got group coaching. No rest for the wicked here today, but looking forward to spending some of the time with you again today on Foundation. We're going to be talking about the TS Trader platform. We're going to get it all set up, talk about the adjustments you can make, where all the features are, some of the indicators, some of the drawing tools. We're going to get a good look and play with it so we all get a good idea of how to look at it. If most of you, I'm sure, are familiar with your platform. A lot of folks out there new to futures. We want to give them the opportunity to just have a look. I get a lot of questions on how I set everything up. We're going to show that today. So take your deep breath. Stay humble, grateful, and creative in your trading today. I'm going to run down to the proverbial trading pit. See you there in a couple of minutes. Trade well today. Get out there and profit. We'll see you at noon, 12:30 for